Buyers and sellers are both defending key local daily structures while trade tensions with China heat up. Does either side have the upper hand, and what do they need to get done next week in order to further their advance? My name is Lamont, full-time trader, part of the Chart Guys team, where I head up our futures room in the swing report. In this video, we'll cover all that and more, so let's get into it. Okay. First fundamental backdrop right now is I believe China first came out and said they were going to be restricting rare earth metals, which are necessary for, just in general, electronics, semiconductor production, and magnets, things like that. Magnets might not sound terribly important, but they're critical for a lot of different tech. So that is problematic. And the administration responded with threats of 100% tariff on Chinese goods due to set in November 1st, which is like right after they were set to have discussions during I forget, like an Asian summit or something like that. That's in like October and November. But yesterday they reported that the Scott Bessent was going to speak with China to discuss potentially avoiding all of that. So it kind of seems like the old cycle of trade war with China heats up, market sells off, discussions are announced, market recovers a little bit, and then along the way, before there is any kind of deal that is made, oftentimes we'll get bumps in the road because you'll get headlines that say talks are falling apart, right? And basically whenever you get the headlines that things are going better, there's usually some relief, right? And then when throughout that cycle, that rinse and repeat cycle, you'll get both kinds of headlines. And so while it may seem like it's a whole bunch of nothing, like you do want to be mindful of how the market responds to what should be perceived as good information or positive information, and how it reacts to what should be received as negative information. So for example, if like during the last time around 2017, 2018, it got to a point where the negative headlines for China trade war heating up wasn't affecting the market at all in any meaningful way. It would be like a 5, 10, 15 minute reaction, and then it would be back to buying. If that is the case, then that's good information, right? That lets us know that the market doesn't really think that it's going to amount to much. And then, of course, the opposite is true too, right? If good news is not met well by the market, right? Okay, if trade talks are starting to go well, or even a deal has been reached and the market is not strong from that, that would be a bit of a red flag, right? So, we don't want to take information at face value. You want to kind of take the information, consider what the implications of that should be, positive or negative for the market, and then observe how the market reacts to it. That's really how you get the good context, right? That's really how you want to get, that's how you get understanding of the context of the market. So that's pretty much it. Now, regarding which team has the upper hand relative to their local structures. So as of right now, as I was saying earlier, last week nothing really happened, right? Like we spent the entirety of the week, these last 5 sessions, within Friday's mother bar, so to speak. And what was Friday's mother bar? Friday's mother bar did two things. It broke down, establishing overhead supply, and it crashed under the local area of daily demand point of control, 662.67. So right now we should care primarily about these two levels, right? 669.18 and 662.67, the POCs of local supply and local demand. Now, who has the upper hand here? You can kind of look at this in two ways, right? You have the micro lens, which is, all right, well, who has an upper hand relative to these two local structures? That's kind of the micro lens. That would have to be sellers, right? Because the sellers are finding way more acceptance right under here, right? Sellers have found a lot of acceptance under the point of control of the local demand zone, right? They're trying to hold the price under here in order to affirm prior demand as supply, which would put them on offense, right? So far, buyers have been on defense since the April low because they've just been continually holding back tests of local daily demand zones. So this is the first time that the buyers are really being threatened here by the sellers. And so, you think about it from that perspective, and also, okay, how much acceptance have these buyers had in the last week over the point of control of this local overhead supply? Not that much, right? Just this little bit from this one session. So from this kind of micro technical lens, you would have to say the sellers are actually looking pretty good here. But then, you zoom out, right? And you think, okay, well, let me apply a more macro lens to this, and you realize, you know what? Actually, the buyers have a lot of space to work with here to set like a monthly higher low. This monthly breakout over 613.23 still very much being affirmed. You could retrace quite a ways from here, 8% from here, and still hold this breakout point, which, bigger picture would be fine. So the longer term momentum, monthly chart, weekly chart, the daily, I'm sorry, the monthly and the weekly, even like the 3 month, yearly, right? Technically, if you were to zoom out to like the quarterly chart, looks like this, right? Just a big old higher low here. The yearly chart looks like this. Obviously the buyers bigger picture have the upper hand, right? So while technically from just looking at these two key local daily structures, you would have to say sellers are looking better here. Just don't forget that when you're in bigger picture trends, right? Very often the higher time frame momentum will carry over eventually, right? So even if think about it, right? Even if we were to drill down, get back down to here, essentially maybe you'd have weekly oversold conditions. Let me see. I don't think you would actually. So weekly has been, just pretty strong. We haven't even back tested the 50 RSI in quite some time. Like you can see when the trend is very strong, very often you won't even get back to testing this 50 RSI. So we could fall and not get back down there. If that is the case, then we would know that these sellers are not terribly strong. So that's how I think the best way to go forward with this is. Last week we talked about these sell zones, and you can see, okay, these sellers, they are playing defense where they have to, but they're really not advancing that well. Like, yes, you have a lot of acceptance under this point of control, but these buyers are playing defense here, right? Like you hold this double bottom. Low of the day on this session is pretty much right at the value area low, and then sellers had a pretty good start here but couldn't hold on to it, failed to touch the value area low, and then moved all the way to the value area high of this local daily demand zone. Now, that being said, and I know this is a lot of points that are kind of going against each other that you have to kind of weigh out at the same time. That's just how it is, right? It's a complex situation. Most situations are, right? You know, brains don't love that, right? Brains don't love nuance. They like binary stuff, yes or no, black or white, vanilla or chocolate, whatever. But the reality is that, things are complex. And so another thing to consider is if we do roll over next week, these two lows are very close to each other, such that you would expect, just like these two lows were very close to each other and this selling took out both of them, you would expect, one should expect that if you were to take out this Tuesday low, this Friday low should crack as well. And if that's going to happen, then they should look to press under here first things first. So if the sellers do press their micro advantage here, and then make these lower lows, what we should look out for next to assess their strength is, all right, well, what about all this value that was established back here? So if they do happen to crack down under 652.21, we should look to see what happens here. Like the best case scenario, if these sellers do take out these two lows, would be to not get down to 652.21. It's so close that if you were to take out these two lows and still not be able to take this level out and then fall back, come back into this range, that would be a significant failure on these sellers' parts. But if the sellers do see lower lows and acceptance under 652.21, all of this value over here, right, its point of control is at 644.22. And so if they can hold over this guy, then kind of bigger picture here, these buyers are still okay defensively, because holding at 644.22 doesn't even get close to 613.23, right? So if you just zoom out and you look at all of this price action following the breakout over the prior all-time high, there's a lot of volume here, there's a lot of volume here, there's a lot of volume here. So these are kind of our three major levels. But for next week, unless things really get bad for buyers, we should just be looking out for these two key levels. First, to the downside, 652.21 and 644.22. You can see there's no volume traded at 652.21. So again, if these sellers can't trade under there, it's not very strong selling. Okay. I think we had like a longer term buy zone as well. So, these both of these zones make sense because they're constructed off of the potential of the overhead supply and then the potential of the over local daily demand holding, and so if you use either of them, you're okay if you chopped it up, right? So just take your profits, leave your stops over the high with a little bit of wiggle, and then you can honestly do both, right, on like different assets, and then like TQQQ and SQQQ, or I mean SO. I forget what the SPY one is now. SPXS and SPX long, SPXL. We could trade those two, for example, and then let one get stopped out, and then let the other one ride if anything. Sure, there are times when you do stuff like that that both sides get stopped at, but that's if you're picking your location well, it's not terribly often. And if you're taking profits along the way, then also you're probably protected from that, even if even if both sides stop. So I think both are very reasonable, right? And like which zone is more appealing to you should be a matter of your overall bias, right? And maybe your current holdings. If you are very net long, even your like short term operations are very long, then maybe you look for a hedge play right against here. But if you're still just playing with momentum, then you can just stick with that buy zone, which has been again just constructed very similarly to how these zones back here were set up, or this guy. Like it's the same concept. Okay, so that's pretty much it for SPY. Moving on here to the Qs. All right, so the Qs, same dealio, right? It's actually a little bit weaker when we look at the micro lens, right? Because the micro lens using that same exact logic, right? We're going to ask ourselves, okay, well, how much acceptance has there been over the point of control of the overhead supply here, 60867? They failed to get here. This is a very notable failure for these buyers to get so close and not get there. At the same time, the sellers not really holding price under the point of control very well either. Certainly, there's more acceptance under it, significantly more, but compared to a failure, obviously. But not really doing a great job here either. So again, like, how likely is it that the higher time frames kind of are stepping in here? I think pretty likely, right? Like on the smaller time frames, the daily chart right now, sellers are doing exactly what they have to. But who is playing defense here? It's probably not just the shorter term operators, but also longer term players who are thinking, you know what, we don't really think this is that big of a deal. Which, if this big drop, like a lot of the drop can be attributed to the tariff announcement, which obviously it should be, it was sparked off of that, then theoretically, if like, again, you look at what's happened back here, right? There was that big announcement, and then very little ended up following through with that. That's very likely that that's happening right now as well. So anybody who is a seller here, again, you're really just trying to be protective, right? You're probably very net long. You're looking to hedge, and that's fine. Like, you just look at how, for example, Dan, if you're in the community, how Dan has hedged. Sometimes it's great. Sometimes it's a small stop. That's just how hedges work. Sometimes it seems like he's a freaking wizard and nails the top, but no, he's just taking shots when it makes sense. And then if it works out well, great. And if it doesn't, it's like a nick, a flesh wound, so to speak. um, Anyway, so it's the same dealio for QQQ next week. We care primarily about 608.67 and 598.10. And it's also the same concept regarding this monthly breakout over 541.28. Tons of space. We never even came back to it. Like when you don't even come back to back tested prior breakout points, that's really when the market is doing its best. So, as of right now on the monthly time frame, we have so much space to defend this, right? Like this, if we were to do a retracement play here, that would be down to like the 382 roughly retracement. I know there's a lot of daily structures here. That makes it hard to see, but I assure you that it's not that much of a retracement if you were to just come back to this breakout point. And if you were to hold over that breakout point, then again, things are doing just fine. Just like over here, right? Like what was this if just a holding of this major breakout point over here? So that's the idea. It's just thinking about the market from the perspective of change. Like when you're zoomed, especially if you're a day time frame operator, you do a lot of short term stuff. When you're like zoomed into the low time frame charts or whatever, you see a day like this, it can feel really bad, right? Like, oh, okay, that's got to be the start of something bigger, but not necessarily, right? Like this felt really bad as well, but all you did was backtest this area over here. So it's important to contextualize everything. um anyway, same dealio, right? Like 5 days within this mother bar, it's really very indecisive. It's just right back to monitoring these guys. And again, these two lows very close to each other. In fact, these three lows are very close to each other. And so if these sellers were to take out this Tuesday low, they probably also take out this Friday low. And if they don't, again, that's good information, right? Like when you consider what should happen, these two lows should get taken out at the same time. If that doesn't happen, that still is good intel. So like, I don't know, if you messed up, with your wife or something and your partner, and they should be really mad, and then they're not. You're like, oh, okay, something is not right here, right? Like they're setting you up for something bigger, or they're gonna ask for like a big favor or something like that, right? It's always good information when what should happen doesn't. Um, Anyways, So that's really it. Okay, so if we see lower lows, take out both of these guys, I'm thinking 583.32, and then you can see how much value was established here. A lot of volume trade at 580.06. And so if we lower low back under this breakout point, would be very notable in negating this breakout. It's still okay, you know, as long as we're holding over this guy. If we just chop around sideways over 580.06, that's gonna look a lot like this, you know, like all of this bigger picture chop over here. Honestly, looks very similar, right? Potential head and shoulders that fails. This is potentially that as well if we can hold over this guy. Just like this head and shoulders failed because we're holding over this area of demand. It's the same situation, a similar situation. All right. I think we had setups for the sell as well here, right? And both, again, both, right? So let's say you use the buy setups here, right? Okay, great. You can be taking profits along the way, pull these lower orders, right? And then you're fine with your stop under here. And then even if you did this guy, same dealio, right? Chop this up where these buyers are having, sellers are having problems. Pull this bid up here, raise your stop, lower your stop to over here, and you know now you're positioned both ways. Doesn't really matter which way this breaks, you know. So that's pretty much it. Moving on then to the rut here. I don't know if we set up a rut trade, but at this point now, you know, rut doing what it always does, breakout, no acceptance. So, but again, this is a very notable failure. In fact, I was playing for a sell on this day to try to target this guy. And again, this is a matter of when what should happen does not. So just like over here on this day this was a very notable failure. You gap down. They should be trying to get down to here. They did not do that. Notable failure. So it's very similar on this day. You got to gap down, press lower, didn't get there, and then you rallied in the middle of the session, I believe. And then I forget honestly the specifics. Let me see. Okay, yeah, you rally initially and then roll over. So that's actually even worse, right? You rally initially and they get caught up right at this prior all-time high, this major level over here. And then you lower low. And so what should happen after that, right? After you set the high of the day, break the open, take out this value area high, they should have tried to come here. And so an inability to do that is a very notable failure on these sellers' parts. Very similar to here. You open up here, roll back into this range. They should try to get to the lows of the range. They should try to get back to the point of control of under the value area high, and they don't. So that's just notable to me. You know, how it's always something that you have to keep like carrying forward in your narrative. It doesn't mean that, okay, for sure now we bet the farm on these buyers. No, it's just, okay, that has occurred, and now we just keep watching that to see, okay, is that lack of a test here going to continue to be affirmed, right? That's what we should look out for next week in the rut. If they can't get back down to 240.88, then this prior all-time high structure is still being affirmed as demand, and that's obviously a good look for these buyers. Okay, so key downside reference 240.88 and 244.98 we care about as well to see if we can move high prices relative to the prior all-time high can be accepted. And then of course the upside reference is just going to be the all-time high. I don't know if we set up trade zones. I forget here. What? Oh, okay, yeah, we did that last week. So this was a busted one. No bueno. What can you do? And then this one worked out obviously just fine. So again, you can kind of hedge your bets here, trade both ways. I honestly, I guess we could be like more patient with another sell zone, right? Let these sellers take out 240.88, even waiting to take out 237.74 to increase the potential that this is acting as supply, which would then increase the potential that we fall back down into all of this range, right? Because if you fall back down under this guy, we're probably doing this again, you know, like just like all of this was trying to resolve this structure, and now we're trying to leave all of this balance here, and this is the key reference for that. Okay. That's pretty much it here. So moving on then to, that's not right. Is it? No, it's the Dow now. All right, so the Dow, okay, we have this sell set up. Again, this is just like the Qs, SPY, IWMs, same concept, right? You have this overhead supply. If you reject from here, they should try to bring us back down to where they came out of, which is here. Honestly, this first target should probably be here. I'm not sure. Oh, I see, we were looking to get back to here. That's not unreasonable, but I think the first target should be here. And, you know, again, it's a situation where take your profits, pull those orders, walk your stop over here, and then, you know, I think that's a good way to approach the hedge. And if this pops you out of the trade and you fall back down into this range, you can use this structure again. But you want to make sure that there's a lot of follow through on the pop and drop first. So like if you get taken out of this guy and you're thinking, okay, that's not going to work, but then you get another, you know, higher high lax follow through and it creates a lot of space for a lower high under this guy again, you can recycle this kind of a concept, this kind of an idea. Look for that same play and then try to get back down here. Okay, but as of right now, again, I do recommend, because the higher time frame momentum is still very bullish on these sells, you're kind of selling against a lot of higher time momentum, higher time frame momentum. Take some profits, be more protective with the sell side. I think it makes more sense to be protective with the sell side, because again, you're kind of going against the trend in a lot of time frames. Okay. So that is pretty much it. What should we care about next week? Same key levels, really. It's just going to be 455.58, this local daily demand zone, which was supportive of price over here and kind of over here as well, I would say. And then the structure's point of control was supportive here and supportive here as well. So if lower lows next week, eyes on this guy, 452.15, that's just this breakout point over here, okay, which is what made for the lows of this structure. Moving on to the dollar. So the dollar, we probably don't need to update the dollar, honestly. Like, not that we don't need to keep tabs on it, but it's probably going to be more or less the same for the foreseeable future, because again, like, you can just recycle this trade. And this is a situation that's very similar to here, right? Where you can just, you see there's a lot of balance. You find the two key structures. Like when you use volume profile analysis, right? There's, you really just want to think about things from the perspective of change, right? So it's kind of pretty straightforward when you're in a very strong trend, right? When you're dealing with, like, again, like, why did we use these trade zones of old? They're just, based off of, I'm just gonna get rid of this guy. Well, I mean, we might need it. Okay, why did we set these guys up, right? This is just a backtest of demand zone. So like, it's very straightforward in a trending environment. The key structure that we care about, the key structure representative of change, is the last area where there was value established, right? So this was value. The market thought, okay, this is a good price to do business. There's no change here. You break out of it, that's change. To hold a back test of it would be to affirm that change, right? So with this kind of analysis, we care about the key structure of change in a trend that's always going to be the local daily demand or local supply. Now, when something is balancing, what are the key references of change, right? It's the two structures that are dictating all of the no change, right? So as long as we're balancing, there's no change. And so just like in here, we set up a bunch of trades looking for responsive trade against this guy, because that's what was containing all of this no change. Same thing here. It's the same exact concept here, right? The next key structure lower is this guy over here. Sellers need to work through all of that demand in order to make new lows. And at the same time, buyers are getting caught up over here at this structure, which was acting as demand through all of this, and now is acting as supply, right? So, the dollar is going to be more or less the same for until one of these structures no longer holds price, right? So I still stand by both of these trade zones. Makes a lot of sense in my opinion. You can just keep recycling them, right? At this point now, this would be the second time that you could have used this guy, getting close to the target here, negating this daily breakout as long as under 98.265. And again, I think it's fine to recycle this, right? So just stick with it. Just responsive trade is very reasonable if you trade a dollar. Okay, so gold. This is kind of, it's not like a major blow up top, but it's certainly notable, right? To have this very high volume reversal candle here, like a bearish engulfing candle. It's at the highs. That sure looks like there's a temporary top being set right now in gold. Now, that being said, even if there's a temporary top being set here, like, there's no major damage unless you're back under 4059.350. And like, really, where a lot of the value was established was way back in here. Like, for example, this was kind of a blow up top, right? Lots of volume reversal kind of a day. And then, all it did was lead to balance over this area of balance. You know what I'm saying? So this gold could retrace all the way back down here, 20%, and then just kind of trade sideways, and that would still be constructive on a higher time frame, right? Like if you just zoom out to the weekly, it would just be affirming this breakout over here, right? Just like this sell-off was still affirming this breakout, just like all of this was still affirming this breakout here. That's the same. It's the same idea, So, yeah, in the short term, probably some selling or some retracement, some consolidation of this major move, which would be totally healthy because this was a huge move for gold. It's a pretty big move. All right, so eyes on 4059.350 next week, and that is really it. If no acceptance under 4059.350 next week, there's no problem for gold, none. Moving on to NVDA. So for NVDA, just kind of backtesting this area of local daily demand right now. I suppose we can mark it up, right? It is definitely a reasonable place to be looking at this as one area of balance here. And so that's weird. My mouse hotkeys not working. That's weird. All right, 1 second here. We'll just have to do it manually, like plebs here, plebes. All right, so what is this? Not just the hold of this point of control, a local daily demands POC over here. So this area is being affirmed as demand as long as holding over 177.69. I think we set up like like a oh, what the heck? I could have swore we had something set up here. I must have deleted it by accident. Reasonable, you know, to be using this structure as like a backtesting zone. For like just looking for the demand zone, I'm gonna say it's like it's kind of already come in here. But if you were to just be bottom fishing off the lows of this range, give it a little bit of wiggle room under here, then just be looking to retest these highs. This is more of like an aggressive, you know, momentum style trade zone. I think that's pretty reasonable though. I think that would be fine. But kind of aggressive. We're just at the yearly R1 right now, so the yearly R2 would be the next objective. So you're planning to get like another 30 bucks or so after a new high. That's actually pretty good R. All right, so like this would be like your kind of first objective here, and then your next objective would be kind of up here. I think that would be very reasonable for like a momentum style trader. But again, like I said, I personally would prefer to wait for this area to be back tested. Like even if we were to pull away from here, I would prefer to see us like see some really hot and heavy selling, you know, ideally get all the way up here and then retrace like this 40% move or so, and then get back into this structure. That's where I would be most interested personally. We don't really need this. That was a miss. And that would kind of set up a situation like this, right? Where like, so what, remember this trade zone was set up way back here, works 2 times for us. It's why it was just off of this structure, you know? So if we were to hold over this guy, would affirm all of this as demand, that I would have a lot more confidence in, you know, not chasing it up here and like being a kind of a value approach over here. All right. Bitcoin, this is bad. You know, like this doesn't look good at all. I think we did set up a sell zone, right? Or was that, did I just do that in Ethereum? Oh, I must have just done that in Ethereum. Like I said last week, I wouldn't recommend recycling it again, just based off of like the narrative shift. And this is kind of a red flag, I think, for the overall market too. Like for a lot of the selling that we saw recently in the overall market, like a little few hiccups here and there, we weren't too worried about it because Bitcoin was still holding up really well. So if Bitcoin, which is like a higher risk asset, starts to falter here, I think the odds of the overall market staying firm should be diminished, right? Because you know it's a good assessment for like it's a good metric or whatever for risk appetite, you know, like it's Bitcoin's it's not really, you know, there's not a lot of inherent value to it, right? So yeah, just be mindful of that. You know, this could be like some like systematic damage, right, from the alts that were like absolutely destroyed or whatever. Could be that, right? So we'll see. It's really very much right now still all about this guy, and this is very notable, right, for me to see that this point of control hold right at this guy. This is the reference structure that was maintaining all of this balance over here, and it's kind of the gateway into this area from the downside. So I think that's a notable hold, but at the same time, these buyers just not really making any meaningful change to the upside, right? They have to find acceptance back over 107,000 just to negate this breakdown here. Tons of space for a lower high under 116,077.51. Now that being said, of course, it's just balancing in here, so we could very easily just continue to trade to the other side if you're not going to see a follow through on these lower lows here. But that's like the verdict is still out on that. So again, I would be hesitant to reuse this trade zone again. It's already worked two, 3 times already. So I would be hesitant to recycle this. You know, at this point, like again, like it's not a terrible thing to do in my opinion, but I would just be wary of it, right? Like if anything, I would prefer to see us take out this low, come over here, don't see acceptance under this guy to kind of create like an expanding range kind of dealio. And then if you were to get a big move back into this value area, then okay, I would look to play off of this structure again, and then try to get back here. So I would be patient with Bitcoin personally. Moving on to Ethereum. So Ethereum, we set up. Oh, okay, I remember now. We set up the sell because like I thought it was reasonable, but if you are gonna pick a sell, then it should be in Ethereum because Ethereum didn't make new highs, so it's showing us this relative weakness. And if Ethereum does roll back over under this guy again, I should say, not over under this guy again, then that would increase the potential that would just continue to balance in that big old range. So very reasonable. I think you can pull these orders up here and then chop it up, throw your stop over here, and then see if these sellers can kind of follow through over here. Because you know, even if you only got this one fill here, plenty of room here. Take some profit, throw your stop over there, and then see if that'll stick, and they can follow through on this lower low. No change to this otherwise, again, we're just kind of watching the same thing, right? This local daily demand zone is super key. And then, of course, we care about this kind of gateway structure here because of acceptance under there. They should try to come back here, right? Like this was consolidation of this breakout. So if you see acceptance back under this structure, they should try to negate this area next. All right. And then CCJ, so again, looks like a potential temporary top setting in, but honestly, it doesn't really look that bad right now, right? You're just backtesting this area of local daily demand. Again, no change to this, right? Like I'm with a lot of these trades, I kind of just care about the bigger picture. Like I don't really care to do short duration trades like this because even if you do happen to get a trade that works well here, the odds of you seeing like a longer term follow through on it are kind of lower than if you get like a bunch of hot and heavy selling into these major areas that have held before. Like I much prefer like setting up off of this structure is very similar to here, right? Which this trade worked, but then it turns around and it doesn't work for very long. Whereas setting up value trades over here is more like this guy, which has worked for a really long time. So you pick your poison, right? Like there's pros and cons to both. Like I don't think one is necessarily inherently better than the other, right? It's just a matter of what do you care to do, So if you're a short-term momentum trader, it's fine to be playing off of this structure, but for me personally, I care much more about what happens back here to see, okay, well here's this like huge all-time high structure that was in the way for a long time. These buyers finally clear it, and now this is the new area of local daily demand. I want to see if this area of local daily demand can be affirmed, So that's it. All right, so moving on then to trade review. I think I did all my homework here, got everything set up. 1014 was what? Was the by what? Oh, NQ. All right, let's see. So last week, that was 1014 here. The daily context for the Qs, first of all, on the 14th was here. Okay. Honestly, I don't really remember it so well, but let's take a look. 1014, and we'll kill our day time frame references here. I don't really recall. Oh, okay, I remember this day now. All right. So I bought the pass back over the Deepak after hold of the key daily structure and drop and pop at the overnight low. So we had a drop and pop at the ONL. Let's see. I made the local double bottom. Oh, okay, that's this guy. Okay, I remember. Okay, that's here. So here's this. Remember, we were watching this guy, right? We talked about this in the updates. This structure over here, this little 3-day balance, is what made this low over here, right? And then the sellers again made this the Friday low was right at the value area low. So double bottom right at the value area low of this key structure. So on this day, we see a move down to the point of control of it. So I'm talking about that at 946. Just say, hey, listen, it's testing the point of control of that key daily structure. And I thought about the pass back over the open, but it was costly. So that was over here. What? Pass back over, but it's costly right now. Oh, that was the overnight low. So I thought about this guy, right? Buying this first pass back over the overnight low here. That was super costly, like 80 points of risk. And technically the R was okay to get to the open, but I just didn't really want to risk that many points on something like that going against the momentum of this day and and then the prior day we had missed the daily no change level. So I just thought that was a bit too aggressive or too costly for that kind of an aggressive play. It's an aggressive play in general. So I just waited to see a little bit more context. So that was at 947. I was saying, that just seemed too much. But then the Deepak play sets up, right? This pass back over it. So I just tried the Deepak pass under, right? And I was just trying to get to where the developing point of control was prior, right? Because it's basically just the point of control of this little 1 minute supply, right? So I'm thinking, all right, this is much cheaper. I can risk like 20 points or so, try to get back to over here, which is at this point in time, I think was where the point of control is of this was. Just give us some time here. Yeah, pretty much, right? I'll just mark it up, I guess. Right. Oh, actually, it's a little bit lower. Technically, I should include that guy, I guess. But either way, I was just thinking, all right, well, the developing point of control flattened here for some time, so I just assumed that was where there was some value established in this range. So that was the target. That was it. Just straightforward. It's also an 8. I just superstitious. I use 8s or whatever. So let's say I'm looking for a chop under where the Depop traded sideways. It makes me wait a little bit and then get that Depop exit at 50, or the prior Depop exit at 508. And I'm looking for more out of the development value area high that's over here. So I get that exit at 952. Again, it makes me wait. Certainly didn't look good for a while there. Gave it just a little bit of wiggle as I always do for 1.5R. And then the last piece I just took off at the open. I cut out the rest of the open here, and that's over, at this point of the day. It actually rips for like way, way, way more. And, I can see that in a couple ways where I can think, oh gosh, I'm such an idiot. I left so much on the table, blah, 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 blah. Or I can just see it as it was a really good R trade. Like all of these R's were good, right? 1.5, 2.6, 6.7, and that certainly, and that this one trade recovered the red week from last week and then some. So, like I could think about this from the perspective of, oh gosh, it could have been super awesome, but this is like winning a free trip and then like complaining about not like getting a first class upgrade on the flight home or something. You know what I mean? Like it is what it is. Plus, I was just kind of looking to shake off the rust a little bit, right? Just not rust, but like, I mean, I've been having a hard time psychologically, so I did get a better health report, so I'm a little bit alleviated, I guess. But in general, I've just been having a tougher time dealing with the yips or whatever. So I was just happy to book this win, which was honestly a pretty big day, fairly big day. So I was fine with that. And then I was interested in the higher low play later in the session, but I missed it. It was a really major bummer. I missed it. I was looking for a 15-minute higher low play if they can just keep pressing for another like 30 minutes or so. And it was on the rut, and it was a really good trade, but I just missed it. So on the 14th on the rut, I just want to point out like it's really helpful to look forward because here on the 14th, if I was paying attention, it was a really really great set. It's over here. So this was like the first 15-minute retracement here for the rut. Well, let me just make sure actually. Hang on. Let me make sure I'm not misremembering here. Yeah, it was here. It was just like little dinky one. Wait, on the 14th? Was there not a retracement here? I thought. Oh yeah, there was. This tiny little dinky one right here. Crazy move. Right. So on this here, I'll just sync it globally, and then it should show up over here. Right, so once you take out this low here, then the 15-minute here, this 15-minute retracement was underway. And so if you were to set this guy up over here, right, like this, even buying it like over here, right, and you give yourself a little bit of wiggle to try to play to, I had this line marked up, I think, or even, I mean, whatever, like even if you just were willing to risk 4 points, that had some crazy follow through. And I just missed it here. And this one was, I think, the one that I noticed. I think I didn't notice this one, but this one was dirt cheap, like dirt cheap, and I just wasn't paying attention for it. That's my bad. Like I tend to just kind of switch gears there after the 10 o'clock or so. I go eat, and that kind of always distracts me. I just don't feel as focused anymore. So it is what it is. I was really neat because Madam Stamos, one of our futures guys, he crushed this trade. And I think what was really cool about this was that he flipped his bias. So he tried the overnight low short scalp first. Let me just it's over here. So he tried to scalp against the overnight low. That was, I think, the first move, 941. So that's over here. And then he, let's see, she chopped the new low of the day and then he stopped it out. And then he flipped his bias, and I think that was really great. And at 952, he tried the Depop pass as well, so that was over here, this later one. So he's he's just copying me, right? Like he saw I did it here, he's like, oh god, that's a good idea. So he does it here. I'm just kidding. And that was awesome. And then I don't actually know where he took the trade off, but I think he held it for more than I did. I'm fairly confident, so that's pretty sweet. And I just care primarily about the fact that like he was able to be flexible. That's really great, to be able to, when you are daytime frame operator, if you can be super flexible and bias flip like that, I think that's like that's a pretty strong quality to have. Like you should have strong convictions held loosely, and that's a really great example of that. So kudos to him. That was really cool. All right, so let's see. On the 16th, there's a red. Hang on a second here. On the 16th, I bought the rut, passed back over the open, stop. Oh, sorry, over here. Pass back over the open, stop under the low of day. So let's see, we'll switch this out to the, oops. The 16th was here, and what did we do? All right, so we'll talk about the daily context first. And the daily context, this is just a, let's see, look for a while. Okay, I remember this day now. It's just it was like a nothing but kind of a day. Slightly red day, but you know, whatever, doesn't matter. I think they were all reasonable trades. So the rut context on the 16th looked like this. Look like this guy. So we were opening up strong, like relatively strong in the prior day's range. It was a gap and hold. So not the best kind of a day, but the higher prices were accepted, right? If you look on Wednesday here, from a session to session perspective, it was a gap and hold, but value did move higher and they held the prior day's point of control. So I was thinking, all right, if we're gonna open up strong here and like keep affirming the breakout over this guy, I'm willing to join these buyers if they can hold over the open. So I just bought the pass back over the open. And I was looking for a test of the yesterday's value area high, and it failed, so I stopped out there. And then I tried one more time here at what? Hold on. Bit of wiggle, stopped it, and then passed back. Oh, it was a prior day's close, so it's moved. Apologies, I didn't mark up the PDC. So I tried to pass back over the prior day's close because it was also kind of this end of the day structure here. And if the end of the day structure continues to be affirmed, then again, this breakout is still being affirmed, right? This is the end of the day structure here. So I tried that attempt, and let's see, thinking if no acceptance back under 534.5, then it's affirming yesterday's end of the day move. And I chopped it up at the low of the 1 minute supply, which is, you know, that was just the target, like this opening range here. And then I stopped out the rest, and then that was it for the day. Interested in a lower high, and then I missed it later in the session. It was very unfortunate because it was really solid setup. So I'm just calling out because you know what, whatever, we don't have to review that, but like it ended up being a really good setup that I just again wasn't paying attention for. But I like, you know, these futures guys. They're there day in and day out. You know, so if you want to trade with a community of folks, it's not just me in there. You know, it's a bunch of folks are in there sharing their ideas and whatnot, and you know, ups and downs or whatever. Stormy, he took a break from the community for a while, came back, announced his return, and then just hit this really great sell. Observing the Qs here. So on this day, he was looking at it like this. And I really like this logic. And the reason why I wanted to bring it up is because the concept is really sound, right? So essentially, he shorted against this high, which was, I'm sorry, no, against this level here, which was the high. Let me do that. Which was the high of the Tuesday session here. And so he sold it for this lower high over here. I think that makes a lot of sense because every session is trying to affirm or negate prior sessions. So this session was indecisive, right? Couldn't really affirm it convincingly as demand, couldn't affirm this day really convincingly as demand or supply. And then this day again was trying to affirm this day and this day as demand, and they failed to do that. So what's going to happen if you fall back down under this guy after they couldn't affirm this session as demand here, here, and here, and here? What are they going to do? The sellers, they should try to affirm it as supply by defending that high. So I think that was such a sick sell, and then I think he used it again on these 2 days. Obviously, it didn't work. It stopped working towards the end of the session, but that's a banger trade, and this one's pretty solid too. You probably got to chop and stop here. So kudos to Storm. Welcome back. Nice to see you around in your kimono. He wears kimonos. It's not a joke. That's, again, if you want to hang out with a bunch of weirdos, check out the chart guys. Links in the description below. We are weird, but we get the job done. Okay, so anyway, moving on. Finally, the trade, last trade of the week, rut was on the 17th here. And that was just this, very straightforward. This was something I called out during our live streams. Again, if you're interested in that, links in the description for the community below. But on Friday live stream, I didn't get anything done. I wanted to see, you know, how this session was going to shake out first. And what I said was, okay, well, there's relative weakness in the rut, right? If you looked at everybody on Friday, right, there was a lot of relative weakness in the rut. So I was interested in a lower high, but what I wanted to see first was I wanted to see the cash market sellers be affirmed, meaning I wanted to see the open get lost. So during all of this chop here, it was not looking good for these buyers, right? Because it was like this, right? This open over here was all under the prior day's point of control. So, you know, you could have been aggressive here for sure, but I would have preferred like more momentum, right? I wanted to see that we could hold under the open, because holding under the open should have these sellers trying to get here and trying to get here. So I wanted to see some just more alignment of these sellers, right? So I said in this live stream, okay, I'm gonna look for a 15-minute lower high play or a lower high play in general off of the Depop if we can crack under the open. And I honestly almost passed on this because I did not love this. I didn't love that this bounce, like after we made a new low and left cracked under the open. I was interested in that lower high play, but I did not love coming back over the low of this opening range, right? Like a strong sellers would not have allowed that. And you can see in the end of the day, you know, that the sellers, they end up playing defense throughout the entirety of the day. So I took this sell here, and this one, you know, made me sweat for a long time, right? I hit this sell here at 12.21, sold the RTOI, passed back on a Depop, looking for a deval test. I don't really love the notable bounce back over the low of the opening range. That's what we just talked about, right? And I have to wait 20 minutes before getting this first exit here. And it really looked like it was going to take me out a lot. So, you know, again, you just never know what's going to happen, right? We don't get to know what's going to happen. We only get to know, okay, well, what is our bias based off of what happened at prior references and how much risk are we willing to put on? That's all we get to know. And then, you know, let Jesus take the wheel for the rest, you know? So anyway, that's the concept. That was it. You know, the first exit was the deval, and the next exit I took was here, right? Why? Because I figure if these buyers are going to play defense, I'm looking to get here. I'm thinking they should try to get here. But if they're not going to get down there because they can't make a new low of the day, where are they probably going to have problems? They're probably going to have problems at the low of this demand zone over here. So I'm thinking this is the gateway structure into this demand zone. And so I'm thinking, okay, we'll take another exit here. And then the last piece will look to get to that daily point of control over here, right? Because again, if they're gonna have problems, it should be here. And lo and behold, they absolutely do have problems here, right? You keep making new lows here, and you can't see follow through. And so just chopped up the last piece at 451.9, and then I explained that. And then the last piece, I was just out at the end of the day for like just some tacos or whatever. It's like we're like in here somewhere, and I'm thinking, okay, well, these sellers are not getting anywhere, and so I just exited like over here for like whatever, it's a few points if that. And that was a week. So, you know, that's good. You know, I was kind of sweating it a little bit, like heading into this week, because my last week, 2 weeks prior, I should say, was a fairly sizable red week, which normally I don't really have like sizable, try to keep them small. So like I don't normally have sizable red weeks, but I had like 4 stop outs like in a row 2 weeks prior. So like it added up really quickly, which was, you know, a bit unsettling. So bit conservative coming in. I wouldn't say I'm over the yips at this point, to be completely honest with you, but you know, it's good to get back in the win column or whatever. So anyway, that's pretty much it. That's enough rambling from me. Appreciate y'all tuning in. If you made it this far in the video and found that helpful at all in any way, we would very much appreciate it. Like and subscribe. Helps us out a lot. Costs you nothing. And lets us know to keep making content like this. If you're interested in getting trade zones sent to your inbox every single week, update from me, update from Dan, updates on any trades that we take. Check out this room report, links in the description below. That's just trade zones, just like all of this. We've had some really great trades recently. Obviously they're not always great, but you know, the ones that we do live has really high hit rates. So if you're interested in that, check out this room report. Otherwise, appreciate y'all tuning in. Thanks for sharing some of your time and energy with me. Hope you enjoy the rest of your session, and hope to see y'all next time. Farewell.